Hello, everyone. Welcome to our discussion on a crucial topic that affects millions of Americans: student loan debt and education financing. Whether you're a student, a parent, or just someone interested in the economic landscape, understanding the complexities of student loan debt is essential. Let's dive in. Segment 1: Understanding student loan debt. First, let's understand the scope of student loan debt in the U.S. As of 2023, outstanding student loan debt has surpassed $1.7 trillion, making it one of the largest categories of consumer debt in our country. Approximately 45 million borrowers carry this debt, and the average student loan balance hovers around 30. But it's not just the amount that's alarming. It's the impact it has on borrowers' lives. Many borrowers struggle to make monthly payments, and this debt can hinder important life decisions such as buying a home, starting a family, or saving for retirement. It disproportionately affects younger generations, and often those from lower income backgrounds. Segment 2: The causes of rising tuition costs. So, what led to this explosion of student debt? Various factors contribute to rising tuition costs. Firstly, state funding for public colleges and universities has declined significantly over the years. Consequently, schools have had to raise tuition to cover operational costs. Additionally, the increasing demand for advanced degrees pushes students toward higher levels of education, which often come with heftier price tags. Moreover, the growing cost of living and associated expenses like housing and textbooks add to the financial burden on students. Segment 3: The role of federal and private loans. Now, let's talk about the types of student loans available. There are primarily two kinds: federal and private loans. Federal loans offer several benefits, including fixed interest rates, income-driven repayment plans, and potential loan forgiveness options for public service workers. On the other hand, private loans typically come from banks and credit unions, often with variable interest rates and fewer repayment protections. As a result, many students rely on a combination of both to finance their education, which can lead to complex debt situations. Segment 4: The potential for debt relief. In recent years, the conversation around student loan debt forgiveness has gained momentum. Proposals for debt relief often focus on forgiving a portion of federal student loans, but opinions on the best approach vary widely. Advocates argue that debt relief would provide financial relief and stimulate the economy, while critics raise concerns about fairness, the implications for taxpayers, and the potential moral hazard of encouraging future borrowing without accountability. In 2021, President Biden announced plans to provide targeted debt relief, which sparked heated discussions across the political spectrum. Segment 5: Alternatives to traditional student loans. As we navigate the challenges of student debt, it's essential to explore alternatives to traditional student loans. One promising option is income share agreements, where students agree to pay a percentage of their future income for a set period in exchange for funding their education. This aligns the interests of schools and students, as educational institutions have a vested interest in helping students succeed. Additionally, some employers now offer education benefits, helping cover the costs of tuition and training. This trend not only helps employees advance their skills, but also aids in workforce development. Student loan debt is a multifaceted issue that affects our economy, society, and individual lives. As we continue to explore solutions, it's crucial for policymakers, educational institutions, and communities to collaborate and create pathways for affordable education financing. Remember, being informed is the first step to making better financial decisions. Whether you're a student or a parent contemplating higher education, understanding the landscape of student loans can